What happens if the Strait of Hormuz remains closed for more than 21 days? February 28, 2026. Tensions in the Middle East had moved beyond the level of diplomacy. A war that began between the United States, Israel, and Iran quickly escalated into a regional crisis. But the real turning point of the war came on March 2, 2026. The Iranian government announced that it had closed one of the most critical gateways of the global energy system, the Strait of Hormuz. Welcome to Finance Historian, stories behind money, markets, and empires. To support the channel, you can subscribe, like the videos, leave a comment, and share them. Thank you. This decision was not just a military move. It represented a shockwave for the global economy. Because the Strait of Hormuz is not simply a waterway, it is one of the main energy arteries of the modern world. So the critical question is, what happens if the Strait of Hormuz remains closed for more than 21 days? This would not simply mean rising oil prices. It would mean a stress test for global trade, finance, and energy security. Let's examine this scenario step by step. The choke point of the global energy system. The Strait of Hormuz is one of the most critical energy transit points in the world. Approximately 20 million barrels of oil pass through this narrow waterway every day. That amount represents around 20% of global oil trade. In other words, 1/5 of the world's oil supply depends on a single passage. Most of this oil originates from the following countries: Saudi Arabia, United Arab Emirates, Kuwait, Qatar, Iraq. And much of this energy is shipped to China, Japan, South Korea, India. So the Strait of Hormuz is not just the Middle East's energy gateway. It is also the energy gateway of Asia's industrial economies. Closing the strait therefore creates an immediate supply shock in energy markets. But the real crisis begins after about 3 weeks. Because for a short period, the energy system can rely on existing stockpiles, oil tankers already in transit, strategic reserves. However, after about 21 days, the situation begins to change. Refineries start struggling to secure new crude supplies. Energy companies delay deliveries. Oil tankers begin to accumulate in the Persian Gulf. And the question in the market grows louder. When will the Strait of Hormuz reopen? If the answer is uncertain, the crisis begins spreading beyond energy markets. It starts affecting the entire global economy. The first 72 hours, shock in energy markets. Closing a strait does not mean that oil flows immediately stop. Tankers may already be at sea. Storage facilities may still be full. Strategic reserves may be activated. But market psychology moves much faster than physical supply. If the Strait of Hormuz closes, the first 72 hours could bring rapid increases in oil prices, emergency meetings among energy producers, rising shipping insurance costs. Even if OPEC countries attempt to increase production, the problem is not production. The problem is transportation. The oil exists, but it cannot reach global markets. At this point, energy traders begin asking, will this crisis last days or months? If the answer remains unclear, prices continue to rise. Another mechanism quickly enters the market: risk premium. Shipping insurers raise tanker insurance rates. Maritime transport costs surge. Some tanker companies may refuse to enter the region entirely. This does not just make oil more expensive, it makes it harder to transport. Energy markets call this a logistics shock. Oil may still exist underground. Refineries may want to operate. Demand may remain strong, but a bottleneck has formed in the system, and markets immediately begin pricing that risk. In such crises, the oil market becomes not only economic, but also psychological. After 1 week, the tanker crisis. If the Strait of Hormuz remains closed, the first physical disruption appears in global tanker traffic. Thousands of oil tankers may start waiting near the Persian Gulf exit. Insurance companies raise war risk premiums. Shipping costs climb rapidly. At this point, the International Energy Agency may intervene. The IEA could recommend that member countries release strategic petroleum reserves. However, these reserves are not unlimited, and the core problem remains. Reserves provide oil, but they do not solve global logistics. The 21-day threshold. The real crisis begins. In energy markets, there is a critical threshold: 21 days. Most refineries and energy companies operate with roughly 3 weeks of supply inventory. If the Strait of Hormuz stays closed longer than that, the energy system enters a new phase. Refineries begin struggling to secure crude oil. Some production lines slow down. Oil does not only become expensive, it becomes difficult to obtain. At this point, 3 major risks emerge for the global economy. Oil price shock. The fastest reaction appears in energy prices. Oil prices could rise sharply in a short period. History offers examples. During the 1973 oil crisis, oil prices quadrupled within a few months. A Hormuz disruption could trigger a similar shock, because this crisis would not only affect production, it would affect transportation routes. Some energy analysts discuss scenarios where oil prices could reach $150 to $200 per barrel. That level would create a chain reaction across the global economy. Global inflation wave oil is not just fuel. Oil is a fundamental input for transportation, logistics, manufacturing, agriculture. Therefore, rising oil prices quickly affect shipping costs, food prices, airline tickets, industrial production costs. Central banks could face a major challenge. Inflation may rise again. This pressure could be particularly strong in the European Union. Turkey energy importing Asian economies, countries that depend heavily on imported energy, suffer the most from such shocks. Slowing global trade. Higher energy prices also slow global trade because logistics costs rise. Shipping becomes more expensive. This particularly affects major trade corridors such as Asia-Europe routes, Middle East, Asia routes. The production chains that drive the global economy begin slowing down, and that places pressure on global economic growth. Are there alternative routes? A critical question emerges. If Hormuz closes, can oil move through other routes? Some alternatives do exist. For example, the Abu Dhabi-Fujairah oil pipeline allows oil to bypass the Strait of Hormuz and reach the Gulf of Oman. However, its capacity is limited. Similarly, Saudi Arabia can redirect some oil exports to the Red Sea, but these alternatives cannot fully replace Hormuz traffic. So the reality is simple. Alternative routes exist, but they are not sufficient. A major risk for Asian economies. The region most vulnerable to a Hormuz disruption is Asia, because Asian economies rely heavily on Middle Eastern oil, especially China, Japan, South Korea. A prolonged crisis could place severe pressure on industrial production in these countries. And since they are the manufacturing centers of the world, global supply chains could be affected. Military escalation risk. The Strait of Hormuz is not only an economic choke point, it is also a major military flashpoint. For decades, the security of the strait has largely been monitored by the United States Navy. If the closure lasts too long, the likelihood of military intervention could increase. Possible scenarios include naval confrontations, mine-clearing operations, escorted tanker convoys. At that point, the crisis could shift from an economic disruption to a naval conflict. How financial markets react to energy shocks rarely remain confined to oil markets. Financial markets typically react quickly. Common reactions include sharp volatility in stock markets, rising, shares of energy companies, declines in airline and logistics stocks, increased demand for safe haven assets like gold. Investor psychology becomes critical. If the crisis persists, market panic can intensify. A test for the global energy system. The Strait of Hormuz crisis raises a deeper question. How dependent is the modern world on a single maritime choke point? The global energy system's reliance on such a narrow passage represents a major vulnerability. This is why many countries are now focusing on strategies such as energy diversification, renewable energy investments, expanding strategic reserves. Because one reality is becoming increasingly clear. Energy security is not just about production. It is also about logistics. Conclusion. A 21-day crisis could change the world. If the Strait of Hormuz closes for only a few days, markets are shaken, but the system continues functioning. However, 21 days is a critical threshold. Beyond that point, the crisis can spread to energy prices, global inflation, trade flows, financial markets, military tensions. So the issue is not just oil. It becomes a stress test for the modern global economy. And perhaps the most important question is this: if 1/5 of the world's oil depends on a single strait, is that system truly sustainable? Because sometimes wars are fought not only on battlefields, but inside the global economy itself. If you enjoyed the video, don't forget to subscribe to the channel, like the video, leave a comment, and share it. You can turn on the notification bell to stay updated on new videos. See you in the next video.